Hey, welcome, guys. It is Wednesday night, September 24th. This is in preparation for Thursday, September 25th trading day. All right, we're continuing with Viewpoints of a Commodity Trader by Roy Longstreet. Before we jump into the markets here, I wanted to continue on with this for a little bit. If there is one secret to success in commodity trading, this is it. Most traders who ignore risk control know not what they risk. They think that all they risk is money. Actually, much more is at stake: life itself. I am not discussing here vegetable existence, but life. The commodity trader who has life has, above everything else, will, the will to do. This can be, has been, and will be many times in the future killed by an absence of capital, particularly after one has had it. A commodity trader would do well not to ignore this psychological fact in his program. Sorry, my eye. Life is everything to a trader. When one has it, he can wear his tie the way he likes. He can set his own goals. He can be absorbed in his purpose and give expression to his passion for acquisition and possession. For a trader with life, desires are not timid aspirations, but unavoidable impulsions. Sorry. For their sake, he will accept the dangers of a market position. His courage exceeds his virtue. When a trader has life, he has powerful ambitions. He despises limits. He bows to nobody, nor does he emulate another. He likes a tumultuous life. Peace to him is for old age. It does not become a man. There is no return from extinction. When a trader's will is gone, then he is dead. Knowledge is not enough. It never is. Courage is also needed. Risk control is not denial of freedom. On the contrary, it is the only thing that does permit freedom to act. Without capital, courage to act is diminished, as is the power to act. Freedom is the existence of choices. No capital, no choice. It does take courage to live. The brave die. What a price to pay to prove that one is brave. I like that chapter. I got a lot of stuff highlighted in that. Okay, we'll go one more here. Process data. Nearly all come to depend on information that comes through somebody else before it gets to us. It has been modified in some way. Sometimes it is colored by bias. Even unbiased government figures are subject to error because of faulty sampling. The amateur cannot do much to overcome the inherent faults of data that he uses. Professionals can and should smell out the weakness in the figures if they use. Not all situations can be adequately described by words and figures. We are concerned about how people feel and think and how they react to a situation. Sometimes the only way one gets a feel is to take the overnight bag in hand and go to find out for oneself as a general visits the front or the general sales manager calls on customers. Much of the time, process data is reliable. Sometimes it becomes necessary to get the vital facts through a feel of the situation by firsthand contacts. So I think that more is applicable to stocks. We'll do one more short one here, the story. When we were children, most of us were put to bed by a fairy story. As we grew older, most people realized these stories for what they were. Unfortunately, many people who trade still respond to the fairy stories. The only requirement is that people believe it is to be possible. A trader cannot ignore the stories that are at variance with reality. For the time being, the only thing that is important is how long will people believe it. If the story is contrary to the fact, there will, of course, be a day of reckoning. The way I kind of look at that is, the latter part of last week when the internals were showing that we were ready for a drop, but yet the price was still going up. People were still believing it. They were still believing in the fairy tale. But the day of reckoning did come, and so we got to be careful on those days, not ignore what the market's telling us, what the price action's telling us. We sometimes have to go with the price action because that's where the crowd masses still are, regardless of what the internals are telling us. But also understand and be ready to pounce on that day of reckoning when it does occur. All right, the next one is weathering the markets. We'll get to that one tomorrow. All right, so I wanted to jump in here. Let me get this out of the way. So actually, before we jump in the charts here, today was an NR7. I'm sorry, NR4. We did poke below. That's the SPY. So well here, let me jump into this. Sorry. So I got the SPY here. I increased this here to show the LBR. The slow line. See how we've just stayed positive in the slow line. Yes, we're kind of slowly waning off as this price continues to make its move up higher and higher. But for now we are still positive on that slow line. So I want to be conscious of that and not ignore that. Oh, come on. Not that big. Okay. Sorry, bear with me. Okay. All right, so on the SPY here, we might as well do this since I have it up here. I told you we had those 14 days to close above the 5 SMA. Today was a close below that 5 SMA. We do have a potential for a 5 SMA buy as a potential here. But again, keep in mind we are on this extended run to the upside here since back in April 7th was the lows. So May, June, July, August, September, 5 months we've been on this just consistent run up, and not much more than a bounce off the 20-period moving average. So we bounced off it here, bounced off it here, came a little bit below it here, bounced off it here, a little close below it. Thought that was we're going to go on down there. Instead, we started this next rally to the upside. And that leads us to where we are now. So, we have some points of interest for this 20-period moving average. Also this 50-day Fibonacci retracement, pattern here that we could make a move down to touch that if we were to choose to do so. Anyway, so 5 SMA potential buy for tomorrow. Let's look at the okay, we looked at the LBR, the slow line staying positive all this time. Let's go to the ES here. So on the ES, let me go back to SPY here real quick. On the SPY, we're still on a breakout mode. We did let's see. Oh no, I guess we did take out that low. The 3-bar low. Yep, we did take that on the SPY also. So never mind. We took out the lows. So that's interesting. We have this 3-bar, from Friday lows to Monday's highs. Tuesday was an inside day, or inside that 3-bar day. And then today we started breaking to the low side of that 3-bar. So, right now we're showing a potential break to the downside of that 3-bar. So we don't want to ignore that, even though we have the potential for that 5 SMA buy. We don't want to ignore that breakdown of that 3-bar. The 3-bar is a consolidation, the market considering things. We have seen in the past where we break below it, false breakout, and we keep ripping to the upside. Again, how long in the tooth is this thing going to get before we start breaking back down? I don't know. As of right now, the market's showing me that it broke below the 3-bar to the downside. We go to the ES. So we got that same thing. So we had a $1.50 poke through of the 3-bar. So this low over here was 66.7950, whereas this low was 66.78. So 78 versus 79.50. So we got a $1.50 poke through here. We could get a little move back up before we see further down. So this could be. I still have tomorrow as a potential sell opportunities. So. If we were to look at, let's see, this high here to this low, our 61.8% retracements come in, right, just by that. 61.8% retracement come in back at the 67.26 or 27 zone, which is towards the highs here today. The 50% comes back in the 17 zone. The 38.2 comes in around 67.08. So those are 3 potential zones we could look for. Also, we have the 4 and the 5 SMA kind of lining up right here with the 50% as of now. You know, I got some other stuff here. Matter of fact, let me go ahead and pull that over on the 60-minute. One of the other things I wanted to show. So we had on the 60-minute here, we had our first green whack-a-mole zone after we started breaking down here. So we did this breakdown. Sorry. So we did that breakdown from the 23rd, which is yesterday. 23rd, yesterday we started breaking down, kind of you know, flagged overnight into that first whack-a-mole zone that led into the 9 o'clock, 10 o'clock in the morning on those highs there. That was that green whack-a-mole zone, the first one since that impulse down. So when we get those impulses down, that's when I look for that first whack-a-mole zone. So there's that one. You know, we could potentially have a second green whack-a-mole zone coming tomorrow. So it'd be interesting if that kind of coincides with that 50 to 61.8% retracement zone. So I'm looking for at least potentially the first play to look to go short and see if there's any more push to the downside out of that 3-bar to the downside. You know, again, if it doesn't, it keeps ripping to the upside, then I want to be cautious of that we're moving back up into that range, which we'll go over that range that I'm seeing on the SPY when we get to the VIX. Okay, so the 60-minute first whack-a-mole, second one potential. However, on this second push here, so we had this first push down here, you know, consolidation, move back up, and then the second push. Well, that second push, we did it on a little bit of a come on, have it on lock here. So let me unlock that. The second push, we did it. You can see here on this little bit of slow line divergence. You know, the fast line did go down further, so that supported that. However, we do have a little bit of a slow line divergence on that second push down. So that gives me a little bit of caution on that. You know, so just want to pay attention there. Okay, so I also have, sorry, let me get this out of the way here. On the internals, I'm going to pull up the internals here. Internals. Okay. Let's go here with the SPY first. You know, again, we've all, you know, we keep repeating this, that we've just been in this bracketing, you know, trend going up here. So here's what I was talking about, that little bit of potential box zone. So you can see we've had some price overlap, 1, 2, 3, 4 days, you know, and today was the 5th day. We haven't really gone anywhere in 5 days. So, you know, what that says to me is, you know, we could potentially have a box zone here forming. So a potential box forming here. However, you can see the SPY, we broke, you know, closed below these highs here from back on the 16th. You know, we kind of stopped or closed from the close back on the 15th. So, you know, from the 15th to the 24th, 1, 2, 3, 4, 5, 6, 7, 8 days, price is back to where we were, you know, on those 8 days. So I want to be conscious, you know, we do still have this room to the upside here that we can move, you know, but we also have room to the downside that we can move. Oh, come on, what's happening here? There we go. Room to the downside as a possible move as well. So right now, we'll see if we move back up into this box range, or if we continue that 3-bar breakout to the downside. You know, like I said, I'm kind of leaning towards break to the downside, and that's only because what the price action has shown me as of today. But we'll see what the overnight and what tomorrow morning brings on that as far as further continuation down. All right. Okay, so let me pull the VIX in here. All right. Okay, So we got up close to this 1733 here in the VIX. We mentioned that if we move up 3 points from this low here at 1433 to 1733, then that could, you know, lead to further downside. As of right now, we did spike up there a little bit, but we pulled back off that into the close. So I'm still keeping an eye on that 1733. See where our VIX opens tomorrow. You know, see if we're moving back down, or if we continue moving up, which would support a continued move down in the ES. So, all right, that's all I have for tonight, guys. Hope I came across clear with my sentiment. I'm looking for potential continuation down, but I'm open to some of the other signs, you know, that 5 SMA buy, some of the other stuff that could push us back up into that box range. And if we do, you know, I don't know if we'll get full trending to the upside. We could get some back and fill. You know, we don't know. Or I don't know yet, but we'll just keep an eye on the markets and see what they show us. So that's it. Happy trading, safe trading. You know, I know some of us have some family things that we're dealing with this week. You know, so take care of family, and we'll see you back here as soon as we can. Thanks, guys. Trade safe, trade happy. Catch you later.